All right, and welcome back for the episode of Carnivore Trades. Today is Friday, March 31st, 2023. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it here. So, end of quarter, and the markets rallied up 1.4% on the spiders, 1.6 on the Qs. Dow up 1.26, and the Russell was up 1.84. So the Russell actually the leader, although it did come off the highs and never really made a higher high intraday. But percentage gain was nice, and it negated that little sell candle off that 20 moving average from yesterday. So the market's acting well. We are now through the JP Morgan collar that we've had a long time, we really had since December, that got rolled over, and that is now out of the way. I did see some big blocks go off into the end of the day. We'll kind of reevaluate that over the weekend. It might be nothing, might be something. Either way, bottom line, from the technical standpoint, markets had a nice rally here, and they've really had a good week with good volume. Now the volume here, it was very light pretty much all day, but we had some obviously big blocks go off at the end. That's end of quarter rebalancing, so that, don't make too much out of the volume here. That's totally normal. But the volume outside of that has been very light all week long. And again, like we've been saying, we want to give the market a neutral to upside bias. We did get above this red bar high on a weekly closing basis. So that is a sign of strength here in the near term, and will give the markets the benefit of the doubt for now. I have some theories as to where I think this market wants to go through the month of April. I definitely want to see how next week trades before we start getting really into that. But the market's holding up, and we'll give it the upside bias for now. When you have a strong move like that, whether it's on late volume or not, and again, this is still not a very healthy move. These big gaps here, I expect all of them to be filled eventually, and I expect us to make new lows, as you guys know. But right now, don't be a hero. Don't jump in front of the freight train. This market is telling us that it wants to go higher, and it showed that with that close above that pivot, and that close above this red bar, which is essentially that pivot high on a weekly basis. So we'll give it the benefit of the doubt. Spiders here next week. Now it is pretty overbought here short term. I'm watching this trend line next here on the SPY. If you get up into that, Monday or Tuesday, I would say probabilities favor a high percentage chance that we could get back into that 400 handle, where that 50 moving average is, at least some type of a pullback here. But the market's acting well. Look, they're putting liquidity into the market. It's really that simple. So that's what the market is doing right now. The Fed funds rate is above the 2-year Treasury note yield. And we had a soft, PCE data today. PCE is the Fed's favorite kind of inflation gauge. So when you get a soft print, market's going to take that positively. Now, we've said this multiple times, down the road, this is not going to be, the Fed, the market's happy right now because it's closer to the Fed pausing, right? We know the Fed pause is the ultimate sell the news here. So we're getting one step closer to that. So it's a process here. But again, like I've been saying here, give the market the benefit of the doubt. It wants to rally right now. Let it rally. Don't get in front of it. Unless you get like a really high percentage short setup, there's no reason to really do anything right now on the sell side until the market tells us to. If we look over at the triple Qs here, QQQ, basically getting close to this gap. So this gap here on the Qs, and we closed right in line 320. This is 321.51. We didn't quite close into that pivot, but a little bit higher here. That probably wants to coincide with this level here on the spider. So we'll be watching that again. These charts generally line up together. The Dow here, you can see, got through all those levels. We talked about that pivot high and this purple trend line. So we'll say, the 100 MA, we'll say 335. This red bar high will be that same level on the Qs and the spiders for the Dow. Nice move there off the lows. And then the Russell here, still the laggard, we'll call it the 200 moving average, and then that gap. So if you get up into those levels next week, I got to think the market's going to come back in. But, we've talked about this. There was too many shorts. When you have a powerful reversal like that off the FOMC, no less, with an uptick in volume. You know, I had over 100 million shares, and then you have a pause day the next day, and then a day after that, you don't flush and follow through. It tells me there's just too many hedges, and what I mean by that is there's too many puts being bought. This market won't sell until we see shares liquidated. Not, you know, the I don't care how many whales are buying puts. It's not going to matter if they're not selling shares. The more puts that get bought, the more incentive it is to screw those puts over. It's just it's the same thing with short sellers. The more shorts there are, the more, you know, the more piled in it gets, the more incentive it is to screw them over. You need shares being sold. So until that happens, right now you're going to get a squeeze, and it's really that simple here. But those levels though should be major resistance if we were to get up there very quickly, like Monday, Tuesday. Take a look at the VIX as well. This is kind of the area where it likes to bounce, right? So between that 18 and 19 handle, even back in December and August, that marked a pretty good top there. In August, in the spiders rather, and a bottom in the VIX, obviously. You know, you get down to 18 and you get into that level on the spiders, you got to think the VIX is going to get defended there. Market's way overjuiced right now, but again, this is how bear market rallies work. They go higher than you think, and they go quickly. You know, make no mistake though, this is not really healthy price action, but again, you have to respect it moving forward until the market tells us otherwise. Anyways, over to some sectors here. SMH up 70 basis points, new closing high there. I still don't see a ton of upside right now. A lot of resistance with this rising wedge. A lot of resistance up here on the weekly time frame. Can it go a little bit higher if the market holds up? Absolutely. But I just don't see a ton of upside right now. Actually, SMH was actually negative today. You know, it gapped down and it almost turned negative in the afternoon. So maybe some signs of exhaustion there. I knew they were going to make NVIDIA green today, and the reason for that is window dressing. This has been a powerhouse. It's up over 100% since October. It's up, it's up 100% year to date. So I had to check my math there for a second. Yeah, 140 to 280, right? So it's up 100% year to date in one quarter. And basically, the way that works is, you know, you get these institutions. They're going to put this on their their balance sheet, their end of quarter statement, to tell clients that they owned NVIDIA. It doesn't matter that they just bought it today. Their clients don't know any better, so that's just how this works here. But you know, I knew NVIDIA would be green here again. I just don't see a ton of upside here, but it's a powerhouse right now. Got to respect it here. And we'll just leave it at that for now. IGV also with a nice bid getting through that level up to 304.70 was the closing print. So nice move there for IGV through double top. It did fill that gap. 310 is the next kind of big level there. And then, of course, 315 to 317, 320, really all up in this area. If we look on we go back a little bit, that was your big breakdown area. Heck, this was the January low. So a lot of resistance up here, but it's holding up right now. It's had a nice move there, and it's showing relative strength. It is very overbought, though, in the short term. And, you know, big power candle there at the end of a run can signal exhaustion sometimes. So, again, if the market gets up into those levels, that SPY gets up into that trend line, the Qs get up into that gap, we'll look for the IGV to say, we'll just say, we'll say 310, 308. But either way, IGV, nice move. The transports, we're kind of all over the map intraday, so a nice push up and then nice pullback and then a power move into the end of the day. So that has gotten back above this weekly green bar. So that is a sign of strength here in the near term. You will have some resistance at, I want to say 14.7. Let's call it 14.7. You got the daily 50 MA there. But nice move there for the transports. Again, gap, another gap. Not the healthiest move here, but we got to respect the market right now, especially when it's on a liquidity buzz. They can pump this higher, so definitely be aware of that. Anyways, over to rates here. So rates today, let's look at the 2-year first, ZT. That got a nice bid off of the 20 moving average. That's upsloping there. Again, nothing's changed. I just don't see a ton of upside for bonds right now. 10-year holding up okay, and the 30-year also getting a nice bid off that level. I don't see a lot of upside here. And even if we do take this level out here, and we're looking at the TYX now, again, this is a monthly level, by the way. But even if we take that out, I don't see it getting much below 3.2. And then the 10-year, 3% is really kind of the level to me. So I'm not seeing a lot now. Everybody's going to be obsessed with disinflation and deflation for probably the next month or two. But I'm in the camp that this is a secular inflationary market. The Fed can only do so much to fight it. They can't tell China to stop doing what they're doing. They can't tell Russia to stop doing what they're doing. All they can do, they have one tool. That's it. So that's where we're at right now. But bonds, nice little bit here. So the yields did pull back in. We'll leave it at that for now. The 2-year is below the Fed funds rate, and that's all that matters for the time being. On to housing, XHB getting a nice outside bid above the 50 moving average. This has some resistance up here in this red bar, right around 68 and change. ITB with a little bit better of a move, but this is also coming into resistance as well. So not a ton of upside here ultimately, but nice outside move there. We'll respect it for the time being. VNQ finally getting a good bid, and really gapping above that 20 moving average. So it almost kind of needed to gap above that 20, because if you open flat, like whenever there's a level and you're kind of overbought going into it, it's easier to just gap above it. If you can gap above it, it's easier than having to trade through it. And that's what happened. Nice move there for VNQ. We'll see if it can get back to 84. Then if it can get through that, you can get up to these moving averages here. But nice oversold bounce, and this is why I told a lot of my members here who are short, this is where you want to probably look to cover right down in this range. You had a nice run to the downside. Don't get too greedy with it there, but nice little bounce for VNQ. XLF still on the soft side here, and this never went red. It looked like it wanted to go red at one point. But if we look at the KRE, I believe that did go red actually twice today. So 1, 2, so still regional banks still under pressure here. KBE still under pressure. We'll see how this does into end of quarter. Could be some window undressing with these names. I definitely would think that. If you want to make it look like you owned Nvidia all quarter, then you definitely want to make it look like you did not own Charles Schwab or Regions or any one of these troubled banks here. So we'll see how it does next week, but definitely financials still on the laggard side. XBD getting a nice bit above the 20 moving average, so that can get back to 470, and then maybe even 480 here. So you have that upsloping trend line. But again, nice bid there for broker dealers, with Fins still on the weaker side for now. Over to energy, so nice move up for crude. I am watching this rising wedge here on the 4-hour. So this is getting pretty tight in here. People are already getting bullish again on crude. It's like a week ago, everybody was like, oh, let's short crude, let's short crude, let's short crude. And now it's like, oh no, crude's going higher, crude's going up. To me, it's just a breakdown and then a retrace. I think there was a lot of people chasing. I know there was a lot of people chasing it short down here. And that's just what happens. So you get shorts in, chasing into the hole. They get squeezed out. This has resistance at the 50 MA and the 20-week moving average. So I don't see a lot of upside here in the near term. I could be wrong. But I think crude is about done here with this retrace. XLE also having a nice day, going right back into our level there on the weekly. And closing, I guess, fractionally above it. You're above the 50-week moving average, so that's a positive there as well. So nice retrace there for XLE. We'll see what that does next week. XOP getting above yesterday's high. That closed green as well. That still has resistance at 130. Then OIH, kind of a weak day, so up 1%, but still inside of yesterday's red bar, and still below that 20 moving average. So short term, this is still under a little bit of pressure here, and I just don't like this pattern altogether. I wouldn't really do anything with it at the moment. I'm not touching it right now, just kind of letting it be, letting it shake out. Nat gas finally getting a nice bid here. Nice outside move here. If we look on the hourly, if we look at the bands here, I know I don't show the bands that often here, but I love this type of move. So the shorts really kind of jumped on board here, looking for gap fill this morning, and you never had a Bollinger Band expansion, so it ripped to the other side, and then you got an expansion to the upside. And now you've got a nice kind of like bull flag here working on the hourly. So I think Nat Gas is trying to put in the bottom here. Nice little W pattern. Also, daily Bollinger Band starting to point up there. But yeah, nice little outside move there for Natty. Definitely a change of character. And they made some higher highs here. So that is step one for natural gas. Anyways, let's get over to the DXY dollar index. I almost was going to say it didn't finish with a doji for once, but it did. This is very strange to me. The dollar index, that's 1, 2, 3, 4, 5, 6, 7, 8 days in a row with a narrow body doji. And if you look at the dollar, this almost never happens, right? Like, look at the size of the bodies of the candles here. So dollar index, definitely a little bit of weirdness here. You could make a case that it is making kind of a down move and then bearish chop, but with all these dojis, it's really sloppy here. Again, I still think it needs to go down and test double bottom. It's holding up for now. It was green. We'll see what it does. And next week, gold here. So that is going to hold above 1962. Unless in the next 20 minutes it has a monumental dump. The significance of this yellow trend line, if you're not following or haven't been following, is not that, is this quarterly level. So gold just made a new quarterly all-time high close, and it got above this red bar high. So that's significant to me. I know everybody's going to say new bull market. I just don't see it right now. I know you had a breakout there. I just need GDX to be at 52-week highs. I mean, if GDX is closer to all-time lows than it is to all-time highs, with gold, making a new quarterly all-time high close, I just need to see GDX leading. Could I be wrong? Sure, but it usually works this way. GDX needs to be a leader, at least above the last local high, right? And it's not. So I'm taking it with a grain of salt right now. If there's more stability, especially in the banks, maybe gold comes in. It's definitely up on fear right now, but we'll see what we get. But that is a major positive. So you can't take anything away from gold here. It's never done that before, ever in the history. It's a new quarterly all-time high close. I don't think many people are going to be aware of that, and not too many of your favorite analysts are going to point that out. But I'm pointing that out here. So anyways, on to silver here, continuing higher through the 24 handle. This looks like it wants to test these pivots here at 24.75. That's really all the upside I have for it at the moment. It's way overbought here, but it's a commodity. That's just what they do. And then platinum here up 1/3 of 1%. I like this. If this can firm up more, this has got 1040 on in the cards. I like this inside bar, and it's holding up well, so we'll respect it. For the time being, copper, nice little test candle here on the daily, still inside of this green candle. This can get to 420, but that's about all the upside I have for it at the moment. Lastly, over to our favorite Bitcoin here. So again, Bitcoin's still holding this green bar and it's consolidating sideways. Nothing's changed here. I still think it needs to pierce 30,000 before it's going to have any sort of significant downside. But trend is up nicely. 20 moving average up sloping, catching up to price. This is a good pattern here. And it's going into a lot of resistance. Just be aware. But it's holding up. We'll respect it. But I think it needs to pierce 30,000 to really get like max bullishness on board before it can have a pullback. All right. Lastly, spiders here, holding up well. Don't get too cute with this market. Just a week ago we had a banking crisis, and now we're 200 points higher. So. Yeah, literally 200 points higher than last Friday. That's a huge move. So don't get cute with this market. Let it tell you what it wants to do. Don't jump out in front of the train here. But next week, I am watching this downsloping trend line there. Also watching that gap fill on the Qs. Maybe it wants to get a little bit higher. Sometimes everybody and their mother is looking at this. So maybe it wants to go a little bit higher through that. That does tend to happen a lot. In fact, a good example was, I would say, Nat Gas this morning. All the shorts were probably trying to short it for what they thought was a slam dunk, because fading Nat Gas has been a slam dunk lately. But eventually the trade gets too easy, and when it gets too easy, a lot of times it goes the other way. So that's a possibility with the Qs, but I am watching that level. Again, for the Russell, 200 MA, 180, and then gap fill there. And then the diamond, we'll just call it 335. I think it can get up to that area. Anyways, guys, going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. I'll talk to you guys all next week.